What's up, everyone? It's Caddy with Money Investing. So quite an interesting day here for the markets with the sell-off happening towards the last couple hours of the day. Nasdaq dropping pretty heavily. A lot of individual stocks such as NVDA, Tesla, AMD. A lot of sell-off happening finally for a lot of individual names. And of course, the S&P 500 and the Dow Jones also dropping pretty aggressively here on the day after the comments from James Bullard, the PPI numbers, and of course, some of a pullback from a technical basis as well. So we're going to cover everything here. There's a lot of news pieces and headlines we need to go over. As always, if you enjoy this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, hit that notification bell, and the link to our Discord and Patreon is going to be down below. You can access all of our day trades, our investing alerts, our swing trading ideas, and our options alerts as well. So links are going to be down below for those private videos and those benefits as well. And there is a 16% discount that you can also access and take advantage of. Now, speaking of the fundamental and technical analysis courses, the bundle, we are doing a giveaway right now if you are interested. All you have to do is follow myself on Instagram. That's the handle, that's the username. There's also going to be a link down below in the description, and connect with us on Twitter. So that's literally all you have to do is to enter. You just have to follow both of these accounts and connect with our community, connect with our money investing community on our socials, and you will be eligible to win one free giveaway, which is going to be a bundle of the fundamental and technical analysis courses. One lucky winner will have access to the entire 80 plus lectures and 16 plus hours of content for free. We'll announce the winner at the end of this month. So the links are going to be down below for our socials. So markets here dropping pretty aggressively, right? Nasdaq down 1.78%. At one point, it was pretty flat, so it was trading as much as 12,000. Then the last couple hours, it pretty much dropped about 1.5%. Same thing with the S&P 500 dropping quite aggressively, over 1%. We got the Dow Jones dropping towards the last few hours, over 360 points. And the 10-year yields getting up to 3.9%, with the dollar index also surging almost up to 104.3. And it was up on the day yesterday. It's up another 19-20 basis points here on the day today. So we're seeing a lot of momentum for the dollar, for the volatility, and for the VIX, because the volatility was up a little bit over 10% on the day today, pushing past 20 levels. And speaking of the VIX, we have a pretty substantial bet on volatility, which I'll go over here in this video as well. So this right here were the PPI numbers coming in very, very hot, extremely hot, I should say, 0.7% month over month gain versus the consensus of 0.4%. And year over year, we're sitting now at 6%. The consensus was 5.5%. And ex-food and energy, we increased by 0.5%. The consensus was 0.3%. Ex-food and energy year over year, we're sitting at 5.4%. The consensus was 5%. Ex-food and energy and trade services, month over month, we increased 0.6%. The consensus was 0.2%. And year over year, we're sitting at 4.5%. There was no consensus for this number. But bottom line is 6 out of 6 misses. 6 out of 6 upside surprises for inflation, unfortunately, on the PPI side. And this really just goes to show how sticky the nature of this inflation is. And, we've talked about this briefly in our previous videos, and we've talked about that, okay, inflation is coming down, it's trending lower, which is good. However, what happens if inflation keeps coming down and then starts stagnating to the sideways, right? It starts going sideways, doesn't drop anymore, but instead starts stagnating, right? That's going to be an environment of stagflation, where despite what the Federal Reserve does here in the short term now, raise another 25 or 50 basis points, is still not going to be enough to really put a big dent on inflation to bring it down, because a lot of it is now has a lot to do with shelter prices, right? Shelter and rentals, they are really the ones that are keeping inflation to pretty elevated levels, because we've talked about how much shelter prices have gone up on a year-over-year basis, and they just keep on trending higher, and that's really been the overall trend for rents. But of course, it's a lagging indicator, so eventually, if and when shelter prices start coming down, if rents start pulling back, then that can really drop inflation pretty substantially. But that, the Federal Reserve has little to no control, very indirect control over shelter prices and rentals. So it's really going to be a question of whether CPI and PPI can drop on shelter prices being a lagging indicator, and they can continue to pull back. If not, then we could find ourselves in an environment where there is a lot of stagflation, which is also what Ray Dalio's also predicted back in July of 2022. Now, going over to some of the other catalysts here, Dow closes 400 points lower as hot inflation report comments from Fed's Bullard raise rate hike feeders. So the Dow Jones shedding about 431 points. We've got S&P 500 dipping 1.38 to 4,090, and the Nasdaq here falling 1.78% to just a little bit under 11,900. Both inflation readings this week point to the stickiness of inflation and that the fight isn't over, especially when considering today's PPI reading was the highest month-over-month increase since early summer, says Mike Lewingard, head of model portfolio construction at Morgan Stanley. And he added that declining jobless claims suggest the labor market remains tight, right? So that's another thing that, we didn't talk about it during the live stream, but I did notice it. The jobless claims came in at around 194,000. The expectations were 200,000 plus. And that once again goes to show the labor market's tight, inflation's hot. That's a recipe for the Federal Reserve to raise rates even more aggressively. It shouldn't be a surprise to see the markets take a breather as hopes of a dovish Fed in the coming months fade. And bottom line is investors should recognize inflation may not return to normal levels as quick as many hope, and with that may come more volatility. Comments from St. Louis Federal Reserve President James Bullard that he'd advocated for 50 basis points interest rate hike in the last meeting and couldn't see a hike of that magnitude in March also weighed on equities. So James Bullard, once again being a hawk, saying that he did advocate for 50 basis points back in the February meeting, and he's pretty much suggesting that we could see that rate hike of that magnitude in March. And Loretta Messer also said she supported a larger hike. So unfortunately, both of these comments not favoring the equity markets and not favoring this bull market that we have seen for the last couple months here. And this right here is another really substantial bet. There is a 50-cent VIX trader returns as volatility hedging back in vogue. So in a transaction late Tuesday, this Tuesday that just went by a couple days ago, someone paid 50 cents each for 100,000 call contracts worth $5 million betting on the volatility index, which is the VIX, which we track on a regular basis on our market updates. And the bet is that it will surge to 50 in May. And of course, right now we're trading at a little bit over 20 levels, and getting up to 50 means another 110 or 120% spike from its current levels. And then there was another purchaser at the same strike price of 50, and expiry was fired out Wednesday with 50,000 contracts snapped up at 51 cents a piece for $2.6 million in total. So a couple of traders betting huge on volatility calls here and expecting the VIX to be in the 50s by May. That obviously is going to result in a pretty substantial drawback in the overall markets. Charlie Munger is once again calling cryptocurrencies, and I quote, crazy, stupid, and gambling, and people who oppose my position are, quote, idiots. So I'll let you make of what you want with the Bitcoin and Ethereum here. On a very substantial rally, so Ethereum is up 1.49%. We did get rejected here at $1,700 once again. And of course, Bitcoin also getting a little bit of a rejection here at 24,650. So got a bit of a resistance here for Bitcoin. So sold off and now once again trying to track back and move back up. But Charlie Munger, 99 years old, in his prime still, once again calling on cryptocurrencies. This right here is going to be the meeting probabilities from interest rates. So 75 basis points is now expected from the Fed funds futures, 25, 25, 25. So 3 hikes is what the market is pricing in. And then for rates to stay there up until November, and then a cut happening in December for 25 basis points. This needs to be readjusted still. We're still in that discrepancy mode where the market's not completely in sync with what the Federal Reserve has told us. So 38% probability that we're going to see a 25 basis point cut in December. Once that moves up to no cuts, then I think the market will be very much consistent and in sync with what the Federal Reserve and the Fed has pretty much told us. So this right here was a state of the market. Extremely brutal. Amazon down 3%. Tesla here selling off 5.7. So don't forget, we do have a hedge on Tesla. I've got 3 covered calls on Tesla. And this really is what the name of the game is, right? We can be investors long term, but we can take advantage of options to better hedge our downside and better protect our downside, lower our cost bases, and generate premiums and collect premiums, right? So once again, I wanted to talk about this because in our live streams, I mentioned this, that many people have a bad rep on options and believe that options are super risky and they're just, not their cup of tea or whatever. But if you just take the time to really understand and learn just the 2 strategies that we're using, that's literally been used by Warren Buffett himself. He's been, this great long-term investor, and even he has used these option strategy, you'll understand that not all strategies are bad or risky or terrible. Some of them are very safe. They're relatively on the lower side of risk, conservative, and they can really optimize your profitability and make you more efficient in the way that you invest. So something to consider, obviously. But Tesla here down 5.7%, and those call options that we sold are up over 30% just today. Amazon down 3%. We got Google down, Meta also pulling back, NVDA down 3.3%, AMD down 6%. So once again, the call strike that I have, $79, expiring in March, was up over 50%, I think, today. Microsoft was down 2.66%, Apple here down 1%. So the entire market really selling off. The only few names that were higher was, again, Cisco pushing higher. We had ALH pushing up, HUM, HCA. Some of those companies pushing up in a very, very small pockets here, but everything else was super, super red. So all 11 sectors in the S&P 500 down. Leading the way was technology, consumer cyclicals, and communication services. So all of big tech really pulling back. So this is a very, very risk-off environment. Over the last 1 week, take a look at how utilities have really outperformed every single other sector. So utilities and energy are up the most, with healthcare selling off quite a bit. And over the last 1 month, technology is still the big leader, with communication services and consumer cyclicals, and utilities and healthcare are still lagging behind. Coffee prices, orange juice, cocoa, rough rice, all pushing higher, with oats, palladium, lumber prices, platinum, and silver pulling back here, and Bitcoin just a little bit under 24,000, with Ethereum just a little bit over $1,600 at the moment. This right here is a very, very important screenshot. I've kind of shared this with everyone quite a few times now already, but it just goes to show the irrationality of the markets. And by the way, I have a video coming out on the market sentiment very soon, and that will really help clear things up a little bit, how strong this is. Mostly a technically sentimental driven rally right now. There's nothing fundamental about this because of the price to earnings multiple on an aggregate basis. And call me stupid if you want, but I just don't believe the market can, demand an 18 to 19 times PE multiple given the current circumstances, right? I think a more appropriate multiple would be a 15 times earnings, and even that would be somewhat of a stretch considering inflation's a little bit higher. But this is over 100 plus years worth of data, compiling that data together, and it pretty much shows us the average price to earnings multiple for the S&P 500, where it should really be trading at on an aggregate basis, considering the dividend and capital gains tax rate and inflation situation. So if we are in a low tax bracket versus high tax bracket, that's really the bottom line here. But then it also takes into account the inflation, right? So to give you an example, a deflation sort of environment where inflation is less than 0% on a year-over-year basis, and we're in a low tax environment, we have seen 9 years of that, right? 9 years over the last 100 plus years. 9% of the times we have been in an environment where there was deflation and low taxes, and the average PE multiple during that time was over 22.3, right? So obviously the highest, much higher, because we're dealing with low inflation, we're dealing with low taxes, and that pretty much means growth, right? Growth, very, very high levels of employment, people investing more money, people spending more money, that just spurs a lot of growth. But on the other hand, if we are dealing with an environment where inflation's at over 4%, and we're dealing with high taxes, that's been 26 years, and the average PE multiple has been 11.2, right? That's incredibly low. Like, that's the lowest we have over here on this list. And right now we are somewhat in that environment, right? Inflation's obviously at over 4%. We can argue ourselves, whether we're in a high tax or low tax regime, but despite that numbers, like even if you take the average of those two, we're sitting at 13 times earnings multiple, right? 13 to 14. That's why I said 15 would be a little bit of a stretch. But considering the high tech, considering the weightings have changed for the markets, considering the economy has obviously evolved over the last 100 years, even if we do 15 times earnings, we're still trading at 17, 18. So that still represents a pretty decent sized pullback for the markets to come down and recalibrate down to a 15 times PE multiple, considering inflation's at over 4%. So again, from a macro perspective, there's a lot of uncertainty. There's a lot of unresolved data and economic reports that we still need to figure out, what's going to be the end game here. But in my strong opinion, as I've already pointed out, this has mostly been a lot of sentimental driven rally. Technicals, absolutely suggest a pullback is overdue. And we've seen some overbought, overextended levels, and then not to mention the fundamentals here, the valuations have really gotten up to some extreme levels. We talked about Tesla, we talked about Amazon, we talked about Google, Meta, NVDA, lots of companies just trading at 40, 50, 60 times earnings again, 10, 12, 15 times sales. And I'm like, what is going on? What is going on? But again, I will be doing a video on sentiment. I've got a great idea for which I will be doing a video on the overall market sentiment here later today. But anyway, talking a little bit about the NASDAQ now, we're down 1.78%. The next support really is going to be this level right here. That's in line with this previous resistance and a little bit aligned with this lower highs that we are now potentially going to see for the markets. This right here were the lower highs kind of getting rejected since January of 2022. So consistently getting rejected. And right now, just a lot of consolidation sideways. So next support really is going to be 11,400 for the NASDAQ. Talking about the S&P 500, so coming down a little bit more aggressively today, 1.38%. So red candle coming in. And the next support really is going to be at that intersection of that previous lower highs and this higher low. So that would mean another pullback of about 2%, 2.5% for the S&P to come down to 4,000. So 4,000 would be far more appropriate in my opinion. So $218, 4,000 divided by 218, we would be trading at 18.3 times earnings. Still, even after that 4,000 point hit, that's going to be 2.5% pullback on the markets. And even then, we would be sitting at 18 times P multiple. But this right here is going to be that higher low. So that is sending support for us to watch for the S&P 500. Talking a little bit about Apple today, and Apple here dropping over 1%. So lots of sellers stepping in. So pretty significant wake on the upside here for Apple. Support level is going to stay put at 150s. So this right here can be seen as a little bit of a support. We've also got the previous higher lows coming right back in. So we'll validate this level. We'll see if Apple stock kind of validates that level or if it starts to pull right back down, considering it's just been long overdue. And the RSI, the MACD, could use a little bit of a breathing room and could come down further. Amazon here down almost 3%. RSI, MACD once again rolling over. Next support really is going to be at $91, $92. So this right here is going to be that level to watch for Amazon. And of course, resistance stays put at about $104, $105 per share for this company, and lots of consolidation sideways. So just down a little bit close to 3%, trading a little bit over $98 per share for Amazon. Talking about Tesla here, and Tesla getting rejected yet again at 217, 218. We were at much higher levels. But once again, take a look at the RSI and the MACD, very similar to that of Apple, and how it's consistently pushed up and now starting to really become overextended. This might be a bit of a reality check for the market that inflation is not going to come down as quickly as many people hoped. And if that's the case, we could end ourselves in an environment of sort of stagflation, which could not be the best environment for stocks to grow, especially tech and growth. Something to consider. Not saying that's going to be the case, but definitely not something that we can rule out right away. And if that's the case, then we definitely have to have proper risk management, proper stop losses, proper hedging strategies so that we can take advantage of both the downside and the upside in equities. So Tesla, really that next support is going to be 165. So this right here is going to be that next level to watch. And right now, $201 is going to be that intermediate support for us to pay attention to. Previous resistance, that right there is going to be that new support level to pay attention to for Tesla. Talking a little bit about NVIDIA now, and NVIDIA here is also falling quite a bit, 3.35%, so down to $220. Resistance going to stay put at $230. They are reporting earnings next week, so that I think is going to be very interesting for NVIDIA. But once again, technicals, very much like look at the technicals here, the histograms literally at 0 right now, 0.07. So we are very close for that, MACD line crossing below that signal line for the first time since December 14. The last time that happened, NVIDIA dropped a little bit over 26%. So once again, if you get that bearish signal, the RSI starts dropping over. I would not be surprised if NVIDIA starts trading in the 190s once again. And that would be a pullback of about 13 to 14%. Very reasonable, I think, in my opinion. Next up, we're going to talk about AMD, and AMD here also dropping quite heavily, down 6%, just $1 above my call strike here. $70 is going to be that next support level to watch for advanced micro devices, all the way down to as low as $71.94, close to $72 is going to be that next support level to watch for advanced micro devices. Talking a little bit about PayPal. And PayPal here on the day was down 1.5%. So still validating that support at $75, $76. This right here is going to be a very important support level to watch for PayPal. And of course, we got a resistance all the way up to $82. That's going to be that lower highs that have been following us since a very long time, since April of 22. So we've just been in this massive descending triangle with the gap to also fill on the downside for PayPal. So intermediate near-term support at 75, 76, resistance at 82, all the way down to as low as $67 is going to be that next support level in case we break down even further. Talking about Square, and Square was down almost 5% today, so a little bit under $79. Next support really is going to be at close to $76, all the way down to $72, $73 per share for Square moving forward, and resistance is going to stay put at 89, close to $90 per share for this company as well. So lots of consolidation sideways. Support level is going to stay put at 76, all the way down to $72 per share, and of course we are seeing a lot of consolidation sideways right now. We're seeing a little bit of a pullback. RSI MACD also pulling back quite aggressively at the moment. Talking about Meta, and Meta here on the day was starting to kind of come down to fill that gap, so we can close this gap a little bit more, down 2.66%, resistance at 183, 184. This is going to stay put as a resistance. Support level is going to stay put at 154, 155 for Meta. And that right there is going to be that next support. Like I said, resistance 183. And again, Meta obviously right now not at fair value. So this is one of the very few times that Meta is trading at a little bit of a higher level than its fair value should be. But that being said, we're still coming down to kind of fill this gap. So 153, 154 is going to be that support. Resistance at 183 for Meta. Netflix here also coming down almost 3%, $350. It's about time. Fair value is obviously a lot lower than where Netflix is trading right now. Next support is going to be down to $332. So this right here is going to be that next level to watch. That could represent maybe another 4 to 5% drop here for Netflix moving forward. And a few more names here. Google here consolidating sideways. So pretty substantial wick on the upside. Sellers stepping in, but then selling right back down to just under $96, down about 1.36%. Resistance is going to stay put at about $100. So this right here is going to be that level to watch, and support level all the way down to $86. And Google is one of the very few names that I could, mention that is trading at very reasonable to okay valuation. Everything else still needs to come down quite a bit. And Microsoft here down 2.66%. There's been a lot of talk about Bing AI, so I will be doing a separate video on them as well. It's been a little bit more strange than what many people expected it to be. So I will be doing a video on that very soon. But next support really is going to be 247. Microsoft's fair value is in the low 200s right now. So definitely incredibly overpriced in my personal opinion, considering from a price to sales standpoint. And finally, we got Shopify just giving up on all the gains that it had from the last 2 to 3 days. It was pretty much up 13%. And in just one single day, it dropped almost 16% with lots of volume. So breaking down below this support over here, we're going to actually move this up to this resistance at $54, and the next support really is going to be at $41.45 with a gap that is still yet to be filled around here for Shopify. So this right here is going to be the gap, support level down to $41.45 for this company. So hope you guys enjoyed this video and a complete update on the markets. Bottom line is inflation's still sticky. It's still coming in hot, so be cautious. Risk management needs to be very important. And needs to be put a lot of emphasis on. And hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe. And also don't forget that we have our giveaway for money investing, fundamental and technical analysis courses. The bundle, one lucky winner will walk away with the 16 plus hours of content, 80 plus free lectures available for you to become eligible. All you have to do is just literally enter the following, and then of course just connect with us on Twitter and Instagram. So always happy investing, and I'll see you all in the next video.